Looking to get funded? Smart Prop Firm is your go-to platform for exclusive deals on the top futures prop firms. Earn up to 5% cash back and enjoy payout protection in the event your firm doesn't pay you out. Use code SMART at checkout. Click the link in the description to maximize your trading benefits. Welcome back. Today we're going to break down the strongest algorithmic entry function, the unicorn model. This video is going to be split into two main parts. We're going over the theory first, which we're going to go into breaker blocks, how to identify breaker blocks, what makes up a unicorn, and then we're going to go into part B, which is the automation, how we were able to automate this into an indicator that automatically alerts you when unicorns are formed, allowing you to never miss a high probability trade setup again and to save hundreds of hours of screen time and not have to babysit charts. And also part C, which is not here, we're going to go over some chart examples at the very end. So let's get right into it, baby. So what are unicorn entries? Well, they're made up of two things, of two different PD arrays. A PD array is simply a support level or resistance level. It's the way we identify points of interest. Just to list them all right here, again, to make sure we're all on the same page. PD arrays are swing highs, swing lows, fair value gaps, breaker blocks, order blocks. Those are our points of interest, our support and resistance levels. So a unicorn is made out of two PD arrays right here. A breaker block, which is the unicorn entry foundation. This is part one. And fair value gaps, the added confluence. You cannot have a unicorn without a fair value gap. You cannot have a unicorn without a breaker. You need both. So how do we identify breaker blocks? Well, a breaker block is created when price sweeps a lower time frame swing high or low as it is stinging into a higher time frame PD array. So here, price is sweeping this lower time frame low to create a lower low into a higher time frame PD array. The breaker block forms in this price leg right here, from this low to this high. We want to mark the highest series of consecutive up close candles found in this leg, in the case of a bullish breaker block. Essentially, just to simplify it, think of it as a failed bearish order block, where if you're bearish, your order blocks would be up close candles, right? But what's very important is that we see the structure. We want to see a low, high, lower low with a higher high. Now for a bearish breaker block, we want to see price sweeping a lower time frame high to create a higher high into the higher time frame PD array, followed by a lower low. So the structure we want to see for a bearish breaker block is a high, low, higher high, lower low. And our focus is on this leg right here, from this high to this low. We are looking for the lowest series of consecutive down closed candles in this leg right here. And that is what we mark as our breaker. So to give you a more visual example of actual candles, this is what that would look like. We see a low, high, lower low, followed by a higher high. And we mark out the highest series of consecutive up close candles in the leg right here from low to high. We mark out the entire range, not just the bodies. Now to clarify here, in order for a low to be a low and a high to be a high, it has to form a swing point. So a low has to have a candle that's higher to the right of it and higher to the left of it. Whereas a high has to have a candle lower to the left of it and lower to the right of it. That's how you identify swing points. So the lows and highs have to be actual swing points in order to properly identify them. So here's a swing point as the low, here's a swing point as the high, here's a swing point as the lower low, and here is a new higher high. So in order to create a valid breaker block and a unicorn entry, we must now add an overlapping fair value gap. You do not have a unicorn without a fair value gap. So in order to clear this up, your fair value gap does not have to be perfectly inside of the breaker. You just have to have a portion of the fair value gap touching the breaker. So if it's just outside of it, but it's still overlapping with the breaker, it's still touching it, that's fine. If it's up here, for example, and a piece of it is above the breaker and a piece of it is inside, that's fine. As long as the fair value gap has some part of it touching and overlapping with the breaker, you have a valid unicorn. So here we can now see a full unicorn entry as it would present itself in real price action and actual candles. We have a bullish breaker, low, high, lower low, higher high, mark the highest series of up close candles. We have a fair value gap overlapping with that breaker, and we now have a unicorn. Now as for your trade entry, you would look to enter at the high of that breaker block, the high of that unicorn. And you can look to set your stop loss at an area just below that breaker block. Now with the power of my custom indicators, we can now automate the entire process of finding unicorn entries and being alerted of them. So as we were discussing in the previous video on impulse shifts, the entry alert indicator has a selection tool that allows you to select the higher time frame PD array that you want to receive unicorn entry alerts for. So you would enable the indicator and use that selection tool to mark out the higher time frame PD array in which you want to watch for unicorn entries out of. So let's say we want to look for a unicorn out of a daily fair value gap. We can do that. And we can even customize the time frame in which we want to look for a unicorn on. And once we set the indicator on a higher time frame PD array that we are interested in, the indicator monitors that higher time frame PD array and will send you an instant alert as soon as a valid unicorn entry forms. Directly to your phone, your Apple Watch, wherever you might want that. This is what that alert would look like on your phone. You would see, for example, on the dollar, let's say you set an alert on a dollar daily fair value gap, DXY 1 hour bearish unicorn from the daily, which is not even possible to do with just normal TradingView alerts. They only let you set alerts on levels. So this is absolutely game changing as to where you can literally turn on your charts and open them when you get your entry function out of an area you were interested in trading. You don't have to sit there anymore and monitor it and risk potentially missing it. You just show up when it's time. Now, with all that being said, let's take a look at some chart examples. So here we are on the gold spot monthly chart. We always want to be doing our analysis from the top down, first starting on the highest time frame, looking for order flow right here. And order flow is very clearly pointing north right here. We have a bullish order flow leg right here, signaled by the indicator. We have a swing low to swing high with a fair value gap in the middle. So we have monthly IRO to ERO. I'm going to have a bullish bias right here. So I'm going to dive down into the daily time frame and look for daily order flow. Is it also pointing higher? So over here on the daily, we do see very bullish order flow right here. We have had fair value gaps been respected, displacing, creating new fair value gaps. So we are in confirmed bullish order flow conditions. We have a new fair value gap about to be created right here. So let's move forward one candle, and there it is. There's an order flow indicator marking out the most recent price leg right here, the most recent order flow leg, swing high to swing low with a fair value gap in the middle, as well as this beautiful overlapping level. So this looks really nice to look for higher prices from. So I don't want to miss a potential entry in here. So what I would do right here is equip the entry alert indicator and first mark out the IRO inner price and then the IRO outer price right here, and then mark the confirmation candle, just the third candle that created that fair value gap. And we'll get this pop up, and this is a daily fair value gap, so it's already set to daily. We don't have to do anything right here. Now you can get alerted on all of these entry models all at once, but since the topic of this video is just unicorns, I just want to look for a unicorn. And we can customize the time frame we actually want that unicorn to form on. So for this, I'm going to look at a 1 hour unicorn right here off of that daily level, and let's click apply. And there's our zone. Now, in order to actually apply that alert, we have to go down to the time frame we want to receive that alert on. And what you will do is you would hover over it. See these three dots where it says more? You would click that, and there would be a button that says add alert on the entry alert indicator. Since this is replay, you don't have that feature, but on real-time price action, there will be an option right here. It will be the first one. And you just click add alert, confirm, and it would pop up in this section over here. As you can see, these are some other alerts I have currently active. So let's move forward in price and look for that 1 hour unicorn out of this daily level. So you can see right here, we got that unicorn. And just to clean things up right here, I'm going to hide the order flow indicator so you can just see the entry alert indicator on its own, marking out the bullish breaker block. Remember what we learned about a bullish breaker block. It is a low, high, lower low, followed by a higher high with a fair value gap overlapping. We want to mark the highest series of up close candles in this leg from the low to the high. So right here is your highest series of up close candle, marking out the full range, not just the body. This little bell right here is signaling to you that the indicator has notified you and sent you the alert that a unicorn has been formed. As for your entry, you can either take it right here at the high of that breaker and your stop loss just below that breaker right there, targeting a static 2R. But you do also still have the option to enter right here at the fair value gap in order to get a better RR. But again, the con might be that you miss it if price decides to just push off the breaker. But if you do enter there, one of the pros would be that you don't have to demand so much from price and you get a closer TP. So let's see how this one played out. Eventually hitting both of those targets right here. So here's our next example. This is the gold futures weekly chart. And the first step is we're doing our top-down analysis from the top down, looking for order flow. Now, I'm on the weekly because if you go to the monthly, we're just at all-time highs. There's no real order flow in just yet. This monthly candle is still trading. This monthly fair value gap has not been created. So there's nothing really to work with on the monthly. Let's go down to the weekly and look for order flow there. And this is where we see this most recent order flow leg, swing low, swing high, fair value gap in the middle, marked out by the indicator right here. So we have a bullish bias looking for higher prices, IRO to ERO out of this weekly fair value gap. So dropping down into the 4 hour, we notice that price is well underway right here off of this weekly fair value gap. We are clearly in a market maker buy model higher towards this level. Now, before some of you get confused, what did I just say? What's a market maker buy model? Especially if you're new, I know that's a big word. It's nothing more than the price movement from a PD array to a PD array. So from this fair value gap to this external range liquidity, this swing high, this IRO to ERO, a market maker buy model is simply the price movement from this point to this point. And we're able to capitalize on that price movement using order flow and liquidity. So in this example I'm about to show you, we're actually going to use a swing low, a liquidity pool, in order to frame longs. This is what is referred to as pivot context. If you don't know what that is, I have a full video on that. I'll link it in the top right. Please go watch that right after this. It's a very important topic because we don't always need to demand a fair value gap in order to look for trades, in order to look for a boundary for us to operate within and look for entries. We can also use swing points. That'll open a whole new world to you, because in bullish order flow, any price movement below old swing lows right here is seen as a stop hunt to just continue pushing higher. So I want to get alerted of a unicorn if we do sweep that. So you can use the entry alert indicator in a bit of a unique way right here by marking out the exact swing low you want to see get swept and just marking just slightly below it. Again, I don't have a mechanical level for this. You just want to mark some zone right below that level to let the indicator know that this is where you want the alert to come out of. So don't overthink this, just somewhere right below this. Something like this is fine. And then for the confirmation candle right here, you just want to mark out the exact swing low again. That is a 4-hour level, so we'll just mark out the 4-hour as our IRL time frame, understanding that it's not IRL, it's a swing point, but it works the same. And the unicorn is automatically set to 5 minutes, so you can look for a 5-minute unicorn out of a 4-hour array, and we're just going to deselect every other entry model for the sake of this video, and let's click apply. So here you're on the 5-minute, and we're just going to wait to see when we get that reaction out of this liquidity sweep, which is just this green zone that we marked up right here. Since this is an intraday trade, we are on the 5-minute. We want to incorporate time and we want to be inside of a kill zone. So this is what this gray box is. We want our entry to fall inside of this gray box. So let's move forward along. And right there, you get your 5-minute breaker block. Remember, it's a low, high, lower low, higher high with a fair value gap overlapping. See how it doesn't have to be perfectly inside of it? You just need a portion of it. It's totally fine if part of it is outside of the breaker. You just need some part of that fair value gap to be overlapping with the breaker. So right here, this bell is signaling to you that you've been sent your alert. You would come to your charts, you would see the unicorn, you can enter right at the high right there. You can put your stop loss below the unicorn. I like to put my stop loss just below the swing low of this overall low to high when I can, especially when the unicorn, the actual breaker, is very small and thin like this. I like to have my stop a little more protected, so I will put it just below that low, even though the breaker itself is this bodies right here. I will put my stop loss below the low right here. Hopefully that makes sense. And then just target a static 2R like such. And let's see how this played out. Eventually hitting 2R and tagging this previous month's high liquidity as well. So that wraps up today's video. Hopefully you found it insightful. Again, a reminder, you can now try out all the indicators for literally just $1. You get access to the order flow indicator, the entry alert indicator, SMT, risk manager, navigator, the Discord bot, the full indicator course for just $1 for a full 7 days. The link for that will be in the description below. If you guys enjoyed this video, I would really appreciate a like, comment, subscription. It would really show me how much you guys appreciate what I'm doing here and inspire me to make more content. Love you guys. See you in the next one. Peace out.